It's a busy, crazy Monday morning for many reasons. And I looked at the market, and I'm in the natural healthcare world. So, everyone has their opinions in the normie world on vaccines and medical and everything else. And my opinion is probably not like everyone else's out there. But the market just surged this morning on the approval of the Pfizer vaccine and a bunch of other things that they're working on. But
from the FDA.
from the FDA, yeah. Like, it's like my phone's freaking going off the hook this morning. Like, what do we do? What do we do? What do we do? I'm like, okay, this is what you can do. But it brings in the question, because as we talk about money, and we'll go into gold and silver as we always do, obviously there's going to be money made off of this thing, and there has been billions of dollars made off of this thing. But I always look at Wall Street in the market as a casino at best. So even with the sale of this stuff and those companies making large profits, it's still so inflated. And how do we continue to watch an inflated market not correct itself? I guess you could say. How does it not happen by now? Tell me.
Well, okay, so I guess if you look at what's driving the market, we have a lot of push going into the economy from various sources. So you certainly have a lot of speculators that are out there, and when you have a pandemic, it obviously creates some interesting, some market opportunities. There are those that speculate, for example, let's say the airlines, and say, okay, if we have some sort of resolution to the pandemic that is going to encourage people to start traveling again, then as a speculator, I may forecast that the airlines will start doing well. So I'm going to buy airline stock. And vice versa, the new strain comes out and people are worried, well, maybe this slows down airline travel. Maybe people get worried again about, whether they're comfortable to get on a plane with a bunch of people cramped in, whether we're wearing masks or not, who's vaccinated and who isn't, and do we have to show papers to the airlines to get on board, and, what's the status? So if the perception is that the new strain might slow down people's willingness to travel, then these same speculators might be shorting the airline stocks. But, for those that are guessing on these big pharmaceutical companies, clearly, I think anybody who is a speculator would recognize that you have a company, Pfizer, whoever it may be, Johnson and Johnson, and they come out with an approved vaccine. It seems pretty realistic that there's going to be massive profits generated, and people are going to try to jump in. I think a lot of this is kind of built into these stocks already.
Yeah.
So, you can't stop short-term speculators. They move every kind of market. And we've talked about this with silver and gold, but it certainly is prevalent in the market on a regular basis, where anything that gives you a indication of what might happen in, even if it's short-term, future, you're going to try to get ahead of that curve if you're one of these gamblers, these speculators, and jump on board and see if you can reap some profits from that foreknowledge. It's weird. I remember having a conversation with a stockbroker in the 80s, and I said, you're a stockbroker, and I'd like some advice on what stocks to buy. And his first response was, well, I can give you information on our opinion as a company and, our charts and things like that. But, he couldn't tell me anything that wasn't available public knowledge wise, because that's insider trading. So I'm like, well, then what information are you basing everything on? And it's just the plethora of data that they gather and they keep paying attention to. And, it occurred to me, well, anybody else individually could do their own research as well. I'm sure as a stock company, they probably have access to a lot more information, probably get it maybe a little sooner. I mean, these days, I don't think there's a lot of lag time there anymore. But I'm guaranteed you that there are speculators who are waiting to, figure out where to jump. And if news comes out that, we have an approved vaccine coming from company A, I'm not going to be surprised to see people piling into options and futures for those stocks, figuring if this is successful, this company should make a ton of money, and we should get on board and reap the profits.
How do they? So this is a weird question I had that has nothing to do with the actual market up or down technically, but like there was rumblings, I think, end of last week that Pfizer would be approved by possibly Monday morning. At what point is there, I don't want to say, I do want to say insider trading, but like at what point is there a problem in the market where people know ahead of time what's going to happen versus the regular crowd who may just be sitting home and hoping that like the broker is handling their money well? Like, I know it's a rigged game, but like, does the government really care about that, or is it only when they need to care about it? Because it just seemed like everyone knew it was coming. Like, so you can buy into the stock pretty easily within a week and go, okay, this is coming at some point.
Sure. Well, let's say you guessed that Johnson and Johnson might be the one that gets approval, and it turns out to be Pfizer. Well then, if a lot of short-term players are piling in on the wrong company, they might decide very quickly then to shift out and move to the one that actually got the approval. So then all of a sudden that one stock is going to go down and the other one's going to go up. Obviously information is key, always been key, right?
Right.
It's how people are successful in everything. It's that knowledge. Now, again, there are strict rules that prohibit any company from acting on information that isn't available to the general public. The market has really curtailed that type of activity. And I don't think it becomes a problem until somebody violates, that, and then somebody complains about it. So if, for example, you were a heavy speculator and running a big hedge fund and you piled into the wrong company and it turned out the other company got the approval, and then you subsequently found out that other people were aware of that approval ahead of time and they were able to position themselves appropriately, and you were behind the curve because you didn't have access to information they did, and they acted on it and benefited from it. Well, then you can turn around and suggest, okay, we have a problem, and you could offer your lawsuit, and the SEC will investigate and decide whether or not there's anything there. But it's sort of somebody has to complain and
Right.
somebody has to benefit, and then you have to be able to prove it. That's the hard part too. Or you can speculate all you want, but can you point to something? Can you provide real tangible information that said, hey, these people acted with information that was not available to anybody else, and they had an inside track. People have argued about this stuff like with congressmen for years. Imagine if the congressional people sitting on the committees, moving forward things, like they know a transportation bill is about to be passed, and they go ahead themselves and start buying all of the construction companies that would benefit from the transportation bill. And then the transportation bill gets passed by Congress, and wow, what do you know? They reap huge benefits.
Right.
Well, that kind of insider trading information is pretty straightforward. And in theory, Congress is prevented from acting upon any information they gather for that exact reason. It's too easy for them. So in the modern world, you have to question, where are these people getting their information? And
Right.
is it all a fair, equal playing field? Do you get it when I get it? Does somebody else have access to it ahead of time? And keeping track of that would be pretty difficult. But therein lies the problem. You can make the argument, but you have to be able to prove it in a court of law that there was indeed some substantive information that was given to some party that somebody else didn't get, and somebody benefited from it. But those are few and far between. But when they get them, when the SEC goes after somebody, they usually have a pretty good lock already on that.
Right.
They know, they've got the information. They know where the source was. They've already done all the research. They've put all the dots together, and they've drawn that straight line and said, okay, here is point A. This person got this information. Here's where they got it from. Here's how they acted upon it. Here's how they benefited from it. And here's how nobody else was able to get that information for, days later. A lot of this also came down to a couple of years ago when a couple of smart guys in Chicago figured out how to move data at I think it was about 1/10 of a second faster than anybody else had before them. And they were able to get information on trades that happened at the New York Stock Exchange 1/10 of a second ahead of time. And based upon that, they built a computer system with an algorithm that could trade according to information that was going to come 1/10 of a second later to the rest of the country and benefit from that. So, the technology has certainly changed the nature of what we can consider insider trading. But imagine if you knew ahead of time, if some of your information coming from the health world had indicated to you that, hey, Jason, I know for a fact that Pfizer is the company that's going to get approval, and their vaccine is going to be the one that everyone's going to want to use because it's the first one that got federal approval from government agencies, and that would encourage the millions that have not yet vaccinated to perhaps go that route. And you knew that ahead of time, and bought piles of stock in that company or futures options on that stock. And then it was proved later on that you got that information ahead of everybody else. Yeah, you're subject to those insider trading.
You're in a little trouble at that point. Now, I think it was Saturday, maybe. I remember looking up silver because I hadn't kept an eye on it, and it was at like 23. Like it was almost ready to go under 23, and then I look just now, and it's at, what is it here? We're at 23.64. What is going on with it? Why such the massive up and downs right now?
Well, if you always look at the silver and gold prices in reflection of the dollar, the US dollar's strength or relative weakness, you can pretty much guess which direction it's going to go. So, again, we're fighting economic news that's on several fronts. The Federal Reserve, for example, has started to discuss the idea of slowing down the amount of asset purchases they're making on a regular basis. We've talked about the current level they're at of 120 billion that they're spending a month to push the economy forward. They're doing that by directly intervening in markets, buying treasury securities directly from the United States government, interfering directly into the stock market, and then also purchasing mortgage-backed securities to help drive the real estate market. Now, the Fed's been doing this for 2 years at this incredibly aggressive pace, to the point of having driven the economy forward, which was their goal, because the normal goal that they would have of moving the economy forward is usually accomplished just simply by lowering interest rates. That gets that kind of engine running, but they already utilized that trick, and they kind of used it up and ran down to interest rates of almost zero, and it didn't have enough impact. So they then decided to participate in other methods. And one of the ways that they chose to do that was to directly intervene in markets by buying up treasury securities and mortgage-backed securities. Now, the Fed is discussing slowing this down, the purchasing of their assets. The problem is that because they're such a major force now in driving the economy forward, even acknowledging that they're thinking about slowing down their asset purchases has a negative impact on the markets.
Right.
And the concern is can they actually slow down these asset purchases of 120 billion a month?
Because the ball is already rolling, right? I mean, it's like to slow that down actually can alter the economy big time, right?
Very big, because it's such a huge part of the economy. If the economy were growing well and this were one of several variables that were driving it forward, it would have less of an impact. But this is the major force behind the economic growth, is this intervention by the Federal Reserve. And I've argued for months, if not a year or more, that the problem is we're too reliant now on the Fed as that one resource. We have one resource driving the economy at such a high level that its change will itself have impact. In fact, discussion of its change itself has an impact. Not only making the change, but talking about making the change. So I look at it this way. Let's say the Fed were to aggressively slow down and drop from 120 billion to maybe 100 billion a month, which I think is much bigger than they would choose to do. That still means they're buying 100 billion a month.
Those aren't real. Those aren't even real numbers. I mean, it's so hard to wrap your head around what that number is.
It's 1.2 trillion a year. So, it's insane. And again, without that push, the economy could suffer. Now, the forces at play here are, as soon as the Fed says, I'm not a big buyer anymore of debts like bonds, well, then all the bond buyers, like we talked about, the speculators, right, who are lining up, listening carefully to everything to decide, can I shift some money somewhere in advance? Well, if I believe that the Fed would announce that it's slowing down its debt purchases, that's bad for bonds. So maybe I'll short bonds or move into things that do well when bonds go down. And the problem is that the forces that move the bond market up are a good, fast moving economy. So that's happening at the same time the Fed is threatening to slow down asset purchases. So it's almost as if you have two opposing forces, both looking to have an effect. And it's just a question of day to day, where are we? So a week and a half ago or 2 weeks ago, one of the news information data bits that came out had to do with jobs. And
Yep.
it came
I texted you that day, actually.
I'm sorry?
I texted you that day, and I'm like, why did it just do that?
Yeah. So the jobs number came out, and economists were surprised, as they have been this past couple of months, by everything. They're surprised by inflation numbers. They're surprised by the expanse of price increases across the board. They're surprised by the number of people that went back to work. So a couple weeks ago, we get a surprise jobs number. More people were back to work than they expected. And on this positive sign that the economy is recovering, everybody feels good about the idea that more Americans are going back to work. We had a rally, and that mentality rallies in through the dollar and it rallies through the stock market. And on those dollar days where the dollar strengthens on some short term economic news, you tend to get a reverse in the prices for gold and silver. Because in the end, the price for gold and silver, I think we've talked about this, it really is a mirror reflection of the US dollar. So if you're feeling positive about the dollar, or if you don't think the dollar is going to be inflated, you're not going to be heavily investing in inflation proof investments or investments that benefit with higher inflation. You'll move away from those. Even if it's short term, you might move into things that benefit from a growing economy. So maybe you put your money back to work in the stock market. But if the news comes out then that the economy is not doing well, or COVID is going to slow down economic growth, or the Fed is going to stop making asset purchases at the same level it had been previously, those are negative to the dollar.
Like, where do you think it is going? Because this is what I like. I battle every day. Is I know that over history, obviously things happen, and typically things are not like fast overnight. And I was just showing them as you were away. I was showing them because I follow the crypto market, and the crypto market cap right now, total market cap is almost $2.2 trillion.
Huge.
That's mad. And I'm going, okay, so clearly a lot of people, not necessarily the boomer generations or even I think it's probably more, I don't want to exclude anybody, but let's say 40 or 30 and younger are diving a lot into that market. Like I'm in that market with, I'm not putting big money into it personally. I just put in disposable incomes, but it's built up over the last 4 years. At what point is the dollar just, our country is just going to go, we're done. You can't have this thing as the world reserve currency anymore because it's so watered down. And I don't even know what kind of question I'm asking there, but it seems like something has to give. Does that make sense?
It does. So I think the issue comes down to, as big as the cryptos get, would they at some point somehow replace the dollar? I don't really see that. I think they might run, side by side in some respects.
Right.
And, the cryptos will gain traction as they gain respect and as more things happen. It's interesting to look at. There are articles coming out about regulation every day now. So believe it or not, in the new infrastructure bill that Congress has been kicking around, they've included provisions to force the brokers that sell cryptos to start issuing 1099s.
Right.
So, they're getting to the point where the IRS at least is saying, we don't know what this stuff means. We don't know whether or not it's, technically good or bad, or it's going to survive or not. But we certainly see the trillions of dollars that are going into it. And hey, guess what? We're not getting our tax money from that.
I know. They hate it. They hate it.
Can't stand it. Can't stand anything that allows people to do any kind of private commerce that, at this volume that they can't at least get their piece of. So they're going to try to regulate it more and more. And, I worried about this early in the crypto world because I figured, you keep poking the bear, at some point they're going to step in. So now, if they try to lock it down on the broker's side, what'll happen is that any kind of the commerce that you conduct or any money that you put in, you'll start getting issued 1099s from the broker that handles that transaction, so that The idea being, again, if they can't catch you and individually make you responsible, they'll make the broker dealer, the liable party. They've applied the same premise to us when it comes to the bullion world and gold and silver. They know they can't go back and figure out, maybe 20 years ago, your grandfather bought gold bullion and handed it to you. How would they ever know?
Right.
But what they do is they regulate your ability to sell it by forcing me to provide your information to them on the point of sale. Now, it doesn't apply to the U.S. coins that I like to deal with, and that's part of the reason I like them.
Which is why I love what you do.
Legal currency, constitutionally issued money, and not subject to all this government nonsense. But in the same premise that the way that they figured out how to regulate transactions in gold and silver, they couldn't do anything about, they're applying more pressure on the crypto world. Hey, look at that. So, they make the broker dealer responsible, and the 1099 start getting issued, and there they get their control. Now, again, when we got cut off there, we were talking about this movement up and down. So, on the dollar side, we do get periodic strength in the dollar, and as that happens, there is that dollar index if people want to follow it. Wall Street produces this relative value of the dollar, you will, and they've assigned a number to it. And it used to run in the 110 range or so, and the weaker the dollar get, the lower it went, and then it cracked below 100, and currently it's running around 93 to 94. And recently it's dipped as low as 89, and that's when gold prices were higher, and then the dollar rallied up, and the price of silver and gold go down. If you look at a long-term trend of silver, I went back 10 or 20 years. 20 years ago, silver was $3 and $4 an ounce. It's $4.50 and $5, and the same kind of volatility applied then. It would get up to $6 and pull back to $4.50, and people would ask, well, what's going on with silver? And if you bought at $5.90 and then it was down to $5.20, it was down. Well, yeah, that's true. A lot of people actually were really clever this last week or so, and we got a lot of calls from people that said, hey, I noticed silver's down, maybe I should buy on the dip. And on the gold side as well, and a lot of people took advantage of that. That was a very clever play because this volatility is part of what makes this market move. It's just natural. It's part of the growth of the way silver and gold will go up. So you look at that dollar index, there it is at 93.03. It's down from the 94 range it was on Friday, and therefore you would expect the dollar down, gold up. And that's exactly
okay. And that's what happened. Yep.
Right. So here are the forces now. We have two forces fighting each other. We have the Fed driving the economy forward and hoping to see growth in the economy. And signs of growth in the economy moving forward, those would be deemed positive for the dollar. And that dollar index would probably go up. But then if news comes out that the economy is going to slow down or inflationary news comes out, the dollar index is going to drop and the gold prices and silver prices will go up. So as I had started to say before, whatever intervened and cut us off, is that there had been a rally in the dollar about a week and a half, 2 weeks ago on news that the jobs report had come out better than anticipated. What gets me is that I don't know why economists are constantly surprised by the recent economic news. They're surprised by the rate of inflation. They're surprised by the growth in the cost of goods and services. They're surprised by the number of people that go back to work. And every time they're surprised, there's a knee-jerk reaction to the markets. So the jobs report was a surprise. More people went back to work than the brilliant economists had anticipated. So we rallied the dollar. Silver came down a bit and drifted for about a week. And here we are now. It is coming back. By the way, the premiums on pre-64 dimes and quarters and halves has gone up twice in the last 30 days. It went up again this morning by over 10%. Over 10% increase in the premium that we have to pay to buy dimes, quarters, and half dollars. So
give me an example of what that looks like. So like in numbers, so that people can understand. Like if I ask you like, hey, I want $100 worth of stuff, random, obviously. Like what will that actually cost me versus what it's worth? I guess.
Well, my cost went up about 10%.
Okay.
So if I was getting $2.30 for a dime, I got to add a couple. We're closer to $2.40 now.
Okay.
The prices are beginning to creep up because demand is stripping supplies very quickly. And the entire industry in the gold and silver world has experienced something I've never seen in my 37 years. That is, there's no massive supply overhang anywhere in the open market. Nobody has a large quantity that, as the market conditions change, that people can call and fill their orders. So it's sort of like we're selling everything about as quickly as it becomes available. There's always some buying and selling. I mean, there's always a little bit of both, and that's natural. But the prices are creeping up because the supply chain is so tight
Right.
that even when the price of silver drops, what happens is the dealers are anticipating a harder time replacing the inventory.
Right.
They're expecting more people to come in and take advantage of that dip, but then they're worried about being able to get more inventory to have replacement coins. So they're charging more. They're getting more for the value of the same coin. And I've always anticipated this and said this was one of the reasons I like silver coins over bullion, was that these premiums do have that potential to expand as the demand increases because we have a fixed supply. That's not going to happen on a bullion product that they can continually mint and make more of every day. So the premium on a 100-ounce bar is the same as it was a month ago or 6 months ago, but the premium on dimes, quarters, and halves is beginning to creep up. This is great for those people that own it. It's very positive moving forward as well. And I've always encouraged people on the long trend, always take advantage of the dips if you can. It's just a great way to build on your position. And, it's on sale for, even if it's for a week.
It was actually. I'm glad you brought that up, because that was a question I wanted to ask today. But first of all, like, so you're saying, like, this is kind of crazy to me, that a dime worth 10 cents is really now not like a 1999 dime, but like a 60. Is it pre-65, right? So
Early, right.
so a dime is worth $2.40, which is, it's so crazy to think like that, but it makes sense. Now, that was
Well,
the
there's
thing.
about $1.90 in melt value. It's almost $2 worth of just silver content, in a
Wow.
dime. So just the metal it's made of. And as I've suggested to people that understand, whatever form of silver or gold you're buying, if you're buying a physical, item that you're getting delivered to your door, you're obviously going to have to pay more than what it's made of. I mean, I've always made the
Right.
same analogy. Imagine, you can go buy oil on the open market, and there's the price for, whatever oil is trading for today, which is creeping up also. It's another inflationary statistic. But imagine if you wanted to get a barrel of oil delivered to your back door, somebody to show up with a truck and drop off a physical barrel of oil. You're certainly going to pay a hell of a lot more than whatever the price of oil per gallon would be.
Right.
And the same thing applies to all forms of silver. But what's interesting about the American silver coins is that premium is so low that in a lot of cases it's actually lower than some of the modern stuff that's selling, that they keep making more and more of every day. So it's interesting to me that even though we have a supply chain that's very tight, a fixed supply we know can never be changed. They ended this stuff in '64, and that's it. We're still facing a market that has very affordable pricing structures, and I think it's a smart way to buy silver. Because again, not only will the underlying price of silver keep going up over the years, which I'm convinced it will, but the premiums will continue to expand. And I'll remember this back to the time when old silver dollars used to trade with half dollars, dimes, and quarters at the same kind of limited premium over melt value. And you could buy a silver dollar for a couple bucks over the melt value. Well, now, a typical silver dollar is between 36 and 40 bucks with about $18-20 worth of melt value. So the premium on a silver dollar is 100% more than melt.
Right.
It never used to be that high. But they separated themselves from the other coins because, well, the dollars ended in 1935 instead of 1964, and they made a lot less dollar coins than they made half dollars and dimes and quarters. So now today, the half dollars, they carry about a buck and a half, a buck 70 more of a premium per ounce than the dimes and quarters do. And eventually, I think the quarters and dimes will start carrying more and more premiums too. But for now, it's interesting to see that dynamic, that the premiums continue to grow, even times when the price of silver itself dropped a couple of dollars or a dollar and a half or so. And I looked at that long-term trend of silver going back, and it's amazing how you draw a line on the long-term graph and it's directly heading up. In other words, it's just a nice little increasing angle going forward. And if you extrapolate out, you can see silver being 35 and $50 an ounce in the next 5 or 10 years. And while it's doing that, there will be days it's up, days it's down. So I don't encourage short-term speculation because we never know from day to day what might happen. You
Right.
know, Tomorrow, what if some great economic news comes out and the dollar rallies for a couple of days? Well, then silver would go down. And somebody who bought it a week ago and it was a little bit higher, if they're only playing a short term, well, now they have a bad position. But if they're thinking 5 years from now, like they should, it won't make a bit of a difference. Just like the people when it was $5 and $6, when we had volatility in that range, faced the same issue. Now today they look back and they'll probably forget whether they paid 582 or 521 when it's $24 an ounce for silver.
Right. They're not worried as much. It's interesting because I actually wanted to bring up because it's when I got stuff from you, and I'm the type of person where I study it, but I'm not studying it deep. I usually call Fred. I'm like, hey, I need this amount, and he says, what about trying this and trying this? And I take his advice because he knows what he's doing. There's some people out there that are getting stuff like this, right? Just straight up getting right. But versus, and this has been a great learning experience for my daughter. I literally, when I get a red box from you in the mail, or a bag of what looks like just quarters and dimes, we sit down and I show her, or I take out the little case and I'll show her a gold or silver that's not, it's not one of these. It's from a different time. And that sounds weird to people, but it's what is the difference between something like that, a Morgan or a gold coin that I see is very, not 2021 or anything like that, versus what people are getting when you just go to a website and you spend $500 and you get a bunch of coins sent to you. There's a very big difference between what you're doing and what that is.
Yeah, it comes down to basically a couple things. There's a variety of physical forms of gold and silver that are out there. I mean, if you had a bar of silver, nothing prevents you from, let's say, cutting that into rounds, and putting your face on it or, your logo and selling them. You could offer them for whatever price you want. What value do they have? It's just really the melt value, unless enough people like you to the point where there's so much demand for a Jason Dean silver dollar that
I'm
someone
not doing
starts.
it. There are people out there though that are doing that, and I'm like, I watched some other person's show and they're offering a coin. I'm like, why would I want a coin with your logo on it?
And again, there's nothing to prevent people from doing that. So, they can charge whatever they want over the melt value and try to create a market. The difference is what I'm providing are things that I didn't mint. These were minted by the United States government, and they were issued to us as the public as a form of legal currency. It is the money of the United States, that the legitimate currency of the U.S. that exists was provided to us with the purpose of conducting commerce. And back in the days when these things were minted, it was made with the idea that it could sustain its purchasing power because its intrinsic value was where it derived its value from. So originally, in the 60s, when a silver quarter was minted, a silver quarter had 25 cents worth of silver. So it was pretty straightforward. You knew the value of that quarter, not because somebody had stamped on it, this is 25 cents, and not even because it came from the federal government. It was because it was made of the same amount of value that its face value was. And that was the simple concept of providing a stable form of currency, because it's a lot harder to inflate the value of something that you can't reproduce unlimited quantities of than something that you can keep minting. So the fact that we're dealing in coins that are minted by the government, happen to be made of silver, but they can never go back and reproduce, is huge,
Right.
because supply and demand is a big part of what drives any kind of market. Even the big markets like the bond market are still driven by supply and demand. That's why the Fed's intervention matters. So, moving forward, I think like in terms of this, that I'd say any form of silver, any form of gold that you'd have is certainly got to be better than a paper dollar. But amongst the various forms of gold and silver, I think there are two real distinct advantages in the pre 64, the 64 and earlier coins. Number one, for me, it is a heartfelt belief that I like the idea of constitutionally issued money. It's that Ron Paul mentality of this was intended for us and it is our obligation to protect it and own it as a public. We should all have some legal currency in the United States. But in a distinct advantage sense, that they can't make any more of them. So you own something that, unlike the guy who's making his own coins, if they're popular, he could strike a billion more of them. What's to prevent that? All he needs is more silver. The second advantage of the US coins is that they are not regulated by the federal government because of that legal tender status. It gets kind of quirky, but they eliminate the possibility of the government looking at them as if they were merely a metal valued item, like that 1 ounce coin that the guy produces on his own. That has no regular value in the open market. Only the metal value constitutes any kind of value it would have. And therefore, it can be regulated as a commodity like oil or frozen orange juice or anything that the government wants to regulate and falls under its umbrella and auspices. So the federal government has decided, yeah, we're going to regulate the bullion world because there's a lot of transactions that occur there that are private, and we want our piece of the pie, so to speak. It's the same process they're applying to the crypto. If they see transactions occurring and they're not benefiting, well, they're going to somehow set up an umbrella to regulate and put those things under their jurisdiction. I like the idea that the coin market is free of all that. And first of all, it also eliminates a lot of nonsense on my end as a dealer because I become the responsible party. The more transactions we do in bullion, the harder the regulations get on our end, including the AML, which are the worst. Now, those are the anti-money laundering rules. And those go as far as saying to me, you want to buy $10,000 worth of gold and I'm under AML rules, that would mean that somehow I'm supposed to know that that money came to you legitimately. And that if they quiz me on it and they question me on it, I have to be able to justify that I've satisfied the requirement to quote unquote know that that money was legitimate on your end. Now, how am I supposed to know that without asking you a lot of personal questions that are really none of my business? But this is what the government wants to do is they want to, through regulation, try to control the market. With the coins, I'm not obligated to provide any information. You can buy and sell $1 million worth of gold and silver, pre-33 gold, pre-64 silver coins, and I'm not required to file any forms. They treat you like an adult. They presume you will report any gains that you make as you are obligated to under the tax laws, and you follow those as you see fit. But at least I don't have to provide private information, including a social security number, to any of the government agencies on any of our transactions. So between that and the limited and fixed supply, I see the huge advantage in owning silver and gold, specifically in the form of the coins that we provide.
I would just like to get these bankers out of the whole thing so that we can just have a sound money system. That would be so much nicer, whether we see that or we don't see that. There was a good question. First of all, a lot of comments here. People love your service. They always say hi to Donna for them because they love her as well. And a good question, too, as we start concluding today with the good information. What are your thoughts on industrial silver? I've been following a few different shows, and they're basically what they're saying, and I don't have evidence of this because I don't know this industry, but basically they don't have enough silver for all these different technological advances they want to make. Now, there's other metals out there they can use, but silver is an important metal. Does that affect the market?
Sure. There are a lot of variables that affect the day-to-day price of silver. I've always found the biggest one of all of them has always been the U.S. dollar. It's always that mirror reflection of the dollar that's shown by the prevailing market price of both gold and silver. Again, as the weaker dollar persists, higher prices would prevail for gold and silver and vice versa. Now, again, then there is that world demand for the actual metal, and those things are variables that come into play. We've known for years, for example, that the summertime there's an annual purchase in India that tends to be very large, and it's always affected the market price for gold as suddenly there's a lot of volume of buying. Or in more modern times, there are these monster-sized hedge funds, these huge, enormous pools of money that shift their capital around, on a regular basis to try to take advantage of some of the things we talked about earlier, getting ahead of the curve on information. And as they move their money around, they affect the market too. Clearly, industrial demand for the metal is going to make an impact on supply and demand characteristics. When I first started in the business, it was the photographic industry. They were the biggest
Yep.
consumer of industrial metal, silver particularly, because of the emulsification process in doing film. Silver was used extensively. In fact, these guys began an entire industry of silver recovery. There
Wow.
was an entire market just to recover silver from the process of photographic industry stuff. And that was huge because of this massive demand. Well, when digital photography took over, the demand for that silver dropped. But at the same time, the industrial demand picked up for electronics. Gold and silver have interesting properties. It's one of the reasons they've been around for so many thousands of years and useful. But one of them is they're great conductors of electricity, and they are used extensively in every type of electronic device you have, every cell phone, every computer that you have. All of these things use some degree silver and gold. And the more of these products that are produced, when it was first that, how many people had a cell phone in the 1980s? You had the big brick. Remember the brick?
Yeah, I do remember that.
This big. It was like, it weighed about 20 pounds, and,
It looked like a military phone, satellite phone.
that's what it looked like. The brick, it was one thing. But when the popularity of small size cell phones exploded, well, the demand for that silver began to increase. And I don't think anybody really, well, probably some people, but there wasn't a lot of anticipation of the proliferation of usage of cell phones. But nowadays, I mean, everybody's got one, two, kids have them, everybody has them, right?
Everybody.
So
Yep.
you got billions of people now, billions that are now demanding these new products that all use physical silver and gold. So the industrial demand is growing considerably for that usage, way more than what the photographic industry used to use. And that's impressive because, it's kind of like the buggy whip, the guy that built the best buggy whip, he stayed in business as long as possible until cars took over. And then, you don't need a buggy whip if you're not drawing horse drawn carriages anymore. So as the demand shifted to electronics, this increase in demand for silver. Now, I know the production level of silver has been growing, but the demand has been growing at about the same pace. So
Okay.
we're barely able to keep up. Any little slight increase in demand will put a lot of pressure on the miners, which I've talked to enough of these guys to know that they used to talk about the easy to mine gold and silver. And that reference was that, if you go to a new mine and you're trying to pull out gold and silver, traditionally the easy stuff was at the top, the closest to the surface, which was the cheapest to get to. And some of the mines ran deep. And the deeper you went, you could pull up more metal, but it progressively got both more dangerous, but a lot more expensive.
Right.
And the more expensive it gets to mine, the more that cost gets shifted to the consumer. We've pretty much gone through the easy to mine gold and silver around the world. Uh, as they find new supplies, it tends to become much more expensive than it used to get that stuff out of the ground. So, the industrial usage is kind of an important variable among several others. So, I ranked the dollar number one, but right behind it has got to be industrial use. And I think we're going to see some increases in that demand side. And what's interesting again is I go back to the thinking about the 64 and earlier coins. We're getting growing demand because more people becoming, let's call it, suspicious about the dollar, worried about its future buying power. And a lot more people are trying to protect themselves. So demand keeps growing and more people are trying to participate. But every time somebody buys a bag of silver coins off the market, puts it away for 10 or 20 years, it's just one less bag that's out there and available. And that's
Exactly.
the reason why, we're experiencing this cost increase, even as the price of silver has not gone up. I mean, silver went to $35 and then they told me, okay, premiums are up on dimes and quarters and halves because prices for silver were higher. Well, that would make sense to me. But seeing that happen when the price of silver goes down, the reason I'm seeing that, and again, I've investigated this, is because the dealers are having a lot of trouble getting back inventory they sell.
Wow.
And The fear is the dealers are sitting there thinking, if I sell out everything I have, I just don't know whether I can get it. But in order to make sure I do, I'm going to raise my price, what I will pay, because I want to sustain my level of inventory. And it costs progressively more to do that than it did a year ago. And that is an indicator we're on the right track.
Wow. That's actually that's fascinating. Have you heard this is a theory. Maybe you've heard it already. You might have. If not, I'll send you a link. Have you heard the theory of gold being in the Grand Canyon and there's apparently the Federal Reserve of Boston put out a comic book some time ago regarding gold in the Grand Canyon. I'll have to send you the link. There's this guy I follow, and he talks about that theory. And there's a couple articles. I'll send you some links, but there's a theory that there's a lot more gold out there than they're telling us about in the Grand Canyon.
I haven't heard it.
Okay.
That doesn't mean it's true or not.
Right. That's what I was curious about.
But I guess I wouldn't be completely surprised.
Right.
It would seem to me that somebody would have noticed that before now. But
no, I think they've known about it. They just haven't said anything about it. That was the whole thing. Okay. I'll send you the links. You'll find it interesting.
Not surprised.
Not so you are the type of company, which I love, as we conclude today. You're the type of company that is not just sell some coins. Like, here you go. Here's some coins. Like, just buy this one, which a lot of them are out there. You really take people through an education process. You discuss it with them. The people that I have both physically that come to my practice, but also, distance people and people viewers, they actually they discovered the same thing that I loved about your company. And you can kind of give a little summary on this is you actually talk to them, you educate them on the process, what they're getting into. And it's not hey, I'm going to sell you this, I'll see you in a week or two or a month for the buyback. You're showing them how to actually invest in their long-term legacy and what keeps their family safe, basically.
To me, it's what has driven me to continue to do this for 37 years. It wasn't about merely selling a product. It was about the idea that I became convinced that there was a fundamental reason why we had dedicated so much effort to defining a monetary system the way we had. If you go back to the 1750s, right, 20 some odd years before the Declaration of Independence, there was a decade of conversation that went between the colonists about what proper role of government, what was the government supposed to do, what were its obligations, what was the citizenry required to do. In those days, the king would issue writs of mandamus against the person, or writs of certiorari to a court to say you have jurisdiction, or writs of habeas corpus to say, hey, I want to be able to produce a body of somebody who's been incarcerated to know that they're actually okay.
Right.
And the purpose of these writs were for the king to basically control the economy. And there were conversations for decades about, was this appropriate? And, some of those writs became part of what became the Constitution. This writ of mandamus became part of the Fourth Amendment. So the idea that the government shouldn't just be able to come to you and say, I believe that you're dealing in smuggling, which was the old premise that the king used to issue writs against. And in those days, if you were a Boston merchant person, the king could say, I'm going to send in, government agents to look at your stuff because we believe you may be illegally smuggling in whatever. And that gave them the right to come into your property. So, the Fourth Amendment evolved out of that. And it was the right of search and seizure to be protected by a sworn oath. In other words, somebody needed to swear out an oath that said, I am convinced that a criminal activity has happened. I believe this is what I'm looking for to prove that. So I'm going to specify this is what I'm searching for. And then I get to issue this sworn oath affidavit backed by this now command to say, okay, I want to look at that. The same conversations went into the idea of money. And the thought process, it wasn't taken lightly. there were much of a concern over the issue of money as a subject as there were about the basic rights of individuals, rights of search and seizure, rights for habeas corpus. And the founding fathers decided that, you know, we don't know what the government's going to look like 100 years from now. We don't know what politicians, powerful or not, might try to do. And since we can't possibly control that, we need to set up a system that protects the public. And after all of that forethought, the idea of coming up with the idea of a lawful money system based on gold and silver, the result of all that conversation, all of that forethought by some brilliant thinkers. So it wasn't a random thing, it wasn't arbitrary, it was well thought out. And again, this conversation went on for decades, 10 or 20 years worth of people discussing the concept, arguing one way or the other. Should we have a central bank? Should we not have a central bank? Do we need that type of system? Alexander Hamilton was pushing for the central banking system because
Yep.
the Rothschilds who had supported him, they wanted control over the colonists' banking industry.
Yep.
They saw ahead of time that the colonists would end up separating from Great Britain. They could see that coming. So they wanted control over the banking system. And there was a lot of pushback. Guys like, James Madison, they didn't like the idea of a central bank. Jefferson was opposed to the idea. And there was a battle between these guys that went on publicly, and people could espouse their opinions. And we ended up getting things written that even today, 240 years later, stand as some of the best written words in American in history. Thomas Paine's work and things like writings of the founding fathers that would appear in articles and letters, things that Ben Franklin would write. The Federalist Papers. If nobody's ever read the Federalist Papers, there was an amazing series of conversations between very bright people. So my concept of this industry has always been that we have violated that premise. We didn't do it on purpose. It wasn't like you and I decided,
No.
yeah, I don't want to do this anymore. That was decided for us by
Right.
powers that, took over and control that we didn't have any say in. Now, in the end, you could always lay this on Congress because Congress did approve all these things, but I don't think Congress really understood what it was going for. When the Federal Reserve Act was passed in 1913, I doubt there were 4 or 5 congressmen who really understood the nature of what they were creating. And a lot of people who supported it later in life look back and said, that was a big mistake. We should never have done that. And looking at that, this is what drives me when it comes to this industry, this fundamental belief that we're owed protection. We are owed it. And the only way we can secure our own wealth is to recognize the flaw in the current system. And the flaw in the current system is the ability to print unbacked money. It does solve short-term problems. It allows us to resolve an economic crisis. It resolves us to solve like a 2008 type of financial crisis. But none of those crises would have ever existed had we maintained some standard against the gold and silver markets in the first place. So it's a dual-edged sword. But the farther we move ourselves away from that original concept of real money, the worse it gets for people moving forward. And so I have this fundamental belief that everybody needs that wealth protection. And if people really understood it, you know, we used to talk about this decades ago that, the people would rally around and march on Washington in a positive way and demand a stable currency. But we kind of gave up that would ever happen because this was 20, 25 years ago, 30 years ago. There was no internet then. There was no social media, uprising that could occur like you might get today. We might have had more of a shot of getting something like that to happen 30 years ago if there were social media outlets. But even today, when those exist, we're so far removed from it now that even if the public were to get behind the idea, I don't think we could really change it. So, given that I don't see that it's going to change going forward and that we have to recognize the flaw, I think Americans owe it to themselves to have their own wealth protection. And that's why I really believe that you and everybody own that physical wealth yourself. Don't rely on me to hold it for you. Don't rely on somebody else to store it for you. Take, the obligation of your own responsibility. Own your own physical gold and silver and protect your wealth and your family. And I don't think you're going to look back and regret the concept So it's something that I want to make sure that people really get why we recommend this. I mean, look, somebody once said that, whatever brings an ally into the battle is a positive thing. I think it was Winston Churchill. But regardless, if somebody were to come in and say, I don't want to know anything about it, I don't care, I just don't feel comfortable, I want to own gold and silver, that's fine. But if people do want to understand that, I really believe fundamentally that that's something people should have a grasp on. And I think it's fantastic that you're teaching young kids, your children, like, look, here's real silver, here's real gold.
You
just
have
to. Give
to.
them a sense of that, right? Because they're not going to get that in school.
No, 100%. I mean, you have to, and that's. I'm so excited to bring it to everybody else, and I never thought I would be bringing this to everybody else when I was listening to Fred and his former partner, Andy, who's no longer with us. Just genius educators. And so I want you to, as we finish off today, go to US Coin Capital, US Coin, CAPITOL, like the United States Capitol, not capital letter, but capital building, right? US Coin Capital. What's the number, Fred? The phone number?
1-800-878-COIN 2646. 1-800-878-2646.
And as a couple of the commenters said, as we finish here, they said, make sure if you buy from Fred and Donna and everyone at US Coin Capital, you're going to need to get your professional grade box cutter ready for delivery, because it is packed. And I will endorse this. It is packed better than Fort Knox Gold Reserve, like without a doubt. So, Fred, you're a rock star. I appreciate it.
Department. Thank you. I appreciate that.
They're great, and I love it. And it's a running joke because every time we get ours, I'm like, damn it, I got to get into this thing. But at the same time, after the first one and I got the second one, I appreciate it so much because it's so well done that no one's getting your stuff. They do it so professionally. It's wonderful. So, Fred, tell everybody there we said thank you very much. Everyone loves it. We appreciate you, and keep up the good work, sir.
You got it, Jason. Always great to be with you. And we always have some specials in the corners. They're not always on the website, but if anybody mentions that they've heard us on your show, I always try to do the best I can for everybody. We do provide a few little goodies for your referrals, including things like free shipping and no credit card charges. So I will sustain those and always try to keep a few things at bay for just your listening audience. So don't hesitate to ask if there's anything available that I can make as a special for your folks. We will do so.
Awesome. Fred Dashevsky, US Coin Capital. I appreciate it. For Dr. Jason Dean, Brave TV. You guys have a great afternoon. We'll see you next time. Take care.